time to do business again on Business Incorporated, and for this episode of the program we have a lot prepared for you, and these are the highlights. Egypt's net reserve is up. It has gone up to $47.75 billion. That's for the month of March. African refiners are meeting in Cape Town, South Africa. Correspondent brings us up to date on conversations there. And South Sudan collects $132.6 billion in non-oil revenue for the month of March. Good afternoon, I'm Ini John Mekwa. Let's do business. Oil prices steadied on Tuesday but remain near 4-year lows as recovery in equity markets was outweighed by recession fears, exacerbated by trade conflict between the United States and China, two of the world's biggest economies. So we see Brent up 0.2%, that's about 13 cents to $64.34, while WTI is also up not as much as it was in the morning, but yet to recover to the normal levels which we know them for. So WTI is at $60.88 a barrel, and the two benchmarks we see have slumped 14 and 15% each on Monday after United States Donald Trump announced that reciprocal tariffs, which we see reacting or pushing the market one way or the other since last week. On Tuesday, Beijing vowed not to bow to any of what the U.S. has called blackmail after Trump threatened additional 50% tariff on Chinese goods if the country did not lift its 34% retaliatory tariff. And China's Commerce Ministry says that the country will fight till the end, ratcheting up fears over global economy. Given this increasingly hostile tone, the risk of recession continues to rise, which in turn dims the outlook for global oil demand. Meanwhile, the European Union has proposed counter tariffs of 25% on a range of U.S. goods in response to U.S. tariffs on steel and aluminum. We'll get details of that later on when we speak to our friends in Berlin. Well, the market has also seen a heavy sell-off in recent days as it starts to price in significant demand hit. However, how much of a demand hit we will see is still unclear at this time. In the metal space, gold prices drifted higher on Tuesday, aided by global trade tensions between the U.S. and its main trading partners. A softer dollar is also in the mix here. So we see for this afternoon, not like what we saw at this time yesterday. It's a green one for spot gold, 0.8% at 3,005. But notice that the price of gold is lower than what we had about this time yesterday, even though there's been a bit of recovery. U.S. gold is up more than that, so like double of that, 1.6% at 3,020.70. Spot silver also up $30.24 after it gained 0.4%. Platinum is unchanged at this time, $923.10. Palladium has gained 0.1%, $919.78. So spot gold remains nearly 15% higher for the year, driven by geopolitical conflict and economic uncertainty, strong central bank demand, and increased flows into gold-backed exchange-traded funds. The U.S. index is also another interesting one at this time. That has edged down in the midst of all of this, making greenback price bullion less expensive for overseas buyers. So we may soon see some movement into the gold market, and that, of course, will change the color of what we have here. Now we'll come back here to Nigeria. Well, a sad one for the finance industry here, as Mr. Pascal Gabriel Dozier, the founder of the defunct Diamond Bank PLC and former chairman of MTN Nigeria, has died. He died at the age of 85. Mr. Dozier played a critical role in Nigeria's banking and telecom industries. In 1990, he founded Diamond Bank before its eventual merger with Access Bank. Mr. Dozier was also instrumental to launching of MTN Nigeria, serving as its pioneer chairman and helping to lead the telecom revolution in the country. May his soul rest in perfect peace. Now, well, the tariff is still very much in the news. United States Trade Representative has berated Nigeria for imposing import ban on 25 different product categories, which is impacting American exporters. Coming at a time tensions are rising over the sweeping tariffs imposed on several countries by the U.S., the organization describes the import ban by Nigeria as one of the 10 unfair trade practices perpetrated against the U.S. by different nations. The organization says that import restrictions placed on items like beef, pork, poultry, fruit juices, medication and spirits limits U.S. market access and reduce export opportunities. And we do know that most of this has been done through AGOA, which is expiring in September. No talks of renewal just yet, especially with the way we see President Trump's mind working. Still on the tariff, while concerns of the negative impact of the United States' newly announced tariff spread, the Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewane, believes that the negative impact on Nigeria's economy will be short-term, and factors such as weakening China currency may present some positive opportunities for a country like Nigeria. He was a guest earlier today on Business Morning.
Midterm elections. So I think the United States is going to actually begin to retrace some of the steps, but without giving in totally. There was a reason why the Republican Party and Trump decided to alter the current infrastructure, or what I call the architecture, the global financial architecture. Will they achieve everything? No, they will not achieve everything, but they will achieve a little bit, and that little bit will tilt things in a particular way. The U.S. economy is a service economy, so even if you impose tariffs, the tariffs on services, there are not tariffs on services. So we are going to see that most of the reactions of the market and the reaction of people it's kind of exaggerated because of the fear of the unknown. But I'm saying, and I think so, that the global markets will stabilize, the U.S. will backtrack on some of those policies, and that some of the changes that are good for the global economy in the long run will take place. But having said that, there's no substitute for the fact that countries like Nigeria have to press the reset button, have to use this opportunity to create stability in their own domestic and make the economies competitive. And that's where it is. So one, there should be institutional reform within Nigeria. Two, that Nigeria should accept the reality that we are not a rich country, but we are a country that has the potential of becoming rich if we do the right things. And we've heard this potential story for ages. Now, how do we convert potential into action? That's where we are, and that's the pressure under which Nigeria is having to deal right now.
Still on that, the Minister of Finance, Mr. Wale Edun, has given his assurance that the National Economic Council will assess the likely impacts of the 14% tariff on goods exported from Nigeria to the United States and then make recommendations to cushion its impact on the nation's economy. Mr. Edun, who was speaking at an event organized by the Ministry of Finance Incorporated, says that while the adverse effects on the country will be through oil price plunge, the government is intensifying efforts to ramp up oil production and boost non-oil revenues.
This meeting, organized by the Ministry of Finance Incorporated, is bringing together government officials, development institutions, and heads of government, departments, and agencies towards ensuring accountability and transparency through corporate governance. Over the years, corporate governance in Nigeria has evolved using a combination of statutory frameworks and regulatory codes aimed at enhancing corporate accountability and performance. Government officials plan to now take this vision seriously.
There has not been a consistent effort to actually institutionalize performance-based corporate governance in the public sector. And today, this is a very important event. It's very significant because it is laying the foundation for good corporate governance. MOFI is the friendly partner, guide, and host, and assistant in this journey.
We need to ensure that these institutions that are owned by states or are linked to the states have the capacity, have the credibility, and have the ability to go out there and mobilize capital, both domestic and foreign.
At a time when nations across the globe are contending with economic uncertainties, financial vulnerabilities, and the demand for structural reform, the discourse on the corporate governance assumes greater relevance.
For us in the Nigerian power sector, good corporate governance is not a luxury. It's not a nice to have. It is a necessity for national competitiveness, for financial sustainability, and for inclusiveness in our service delivery strategy. And we expect that this forum will serve as a catalyst, not just for dialogue, but for action.
The Minister of Finance then comments on the 14% tariff hike on goods imported from Nigeria to the United States and how the government intends to tackle them.
For the economic management team of Mr. President and for indeed his whole government, we are going back to the drawing board to look at the scenarios that may play out if the if the current tariff situation is prolonged. For Nigeria, in terms of exports, it's not too bad because oil, minerals are excluded by America.
After the speeches, the Corporate Governance Code is then launched. The code is to serve as a guide towards ensuring accountability and transparency in all government transactions.
Well, talks on tariff continues, but for now, let's take a breather from there and look at cocoa. So we know that in December, cocoa prices hit an all-time high at about 12,000 per metric ton. But the reverse is the case now. We've seen that drop, a decline of about 33% from that peak in December. And of course, we know it's one of the cash crops of Nigeria. We'll talk about non-oil revenue, then this is the way we look. Let's find out perhaps why this is happening and some ways around it with Emefiele Onyenikachukwu, who is an analyst with Financial Derivatives Company. Emefiele, good afternoon and welcome to the program.
Good afternoon. Thank you for having me.
Yeah, so having this 33% drop between December and now, what's in between? What happened?
Cocoa, like we all know, is one of the major key ingredients for commodities for products such as chocolate and beverages. And as of last year, like you said, it hit an all-time high of $12,000 to a metric ton due to adverse weather conditions in major producing countries, which are Ivory Coast and Ghana. However, the reverse was the case yesterday. It declined to about $8,000 to a metric ton. And this is as a result of the ongoing global tariff. And it will interest you to know that the United States is the major consumer of cocoa and cocoa-related commodities. And as a result of this tariff, we're seeing that cocoa-related products will be more expensive for the US. Therefore, cocoa-related commodities will be more expensive for the US. Therefore, demand will drop and lead to a decline in prices. However, on the supply side, we're still seeing that major producing countries such as Ivory Coast and Ghana are still faced with adverse weather conditions which are affecting supply. We also have aging. They're also facing problems of aging plantations as well as the recent rise in swollen shoot diseases that is also reducing production of this commodity. Therefore, this supply concern is expected to cushion the effect of the rise of the fall in the prices of cocoa.
So what's happening to farmers and producers at this time? Are producers, for instance, seeking other markets since the U.S. might seem hard to penetrate at this time? Are they seeking other markets? And what's happening to the farmers?
Okay, thanks for your question. So currently we're seeing that in Ivory Coast, for example, the farmers are shifting their production to rubber because it's more profitable to produce rubber than cocoa. Also, we're also seeing that in Ghana, that the farmers are beginning to shift production towards gold because it's more profitable. What they're getting from producing gold is much higher than what they are getting from producing cocoa. And then as for the producers of chocolates globally, we're seeing that they are beginning to seek for alternative sources of cocoa. For example, we're seeing them looking at alternatives such as lab-grown cocoa. They're also beginning to reduce the amount of cocoa intent put in chocolate and substituting it with oat, nuts, and almond in order not to feel this impact.
So what's happening to Nigeria amidst all of this? Nigeria is also a cocoa producer.
Nigeria is also a cocoa producer, and they're currently forecasting that by the end of 2025, that production should reach 500,000 metric tons. However, this is possible, but challenges still persist, such as logistics, pests and diseases, aging plantations. But the government is also putting in initiatives to achieve this forecast, such as strategic partnerships between organizations such as the International Cocoa Organizations, as well as providing support for farmers, which include teaching them mechanized farming and providing quality beans for farmers.
All right, Onyeka Chukwu Emefiene, thank you so much for sharing your perspective with us this afternoon. Analyst with Financial Derivatives Company.
Thank you.
Let's take a break now. When we come back, I hear there's a recovery, or the drums of recovery in the markets, especially starting from the Asian market. I hope it's now in Nigeria also. We'll tell you about that and a whole lot more after the break here on Business Incorporated. To join us again. Just before we head to the markets, let's take you to Cape Town, South Africa, where the African Refiners and Distributors Association, ADA, the week is on. Today is the second day, and the event brings together key professionals, stakeholders, and experts from across the energy industry to exchange ideas, explore innovations, and strengthen partnership. Well, we have our correspondent, Innocent Semosa, covering that for us. To tell us more. Hello, Innocent, how's it going?
Well, indeed, a very good afternoon to you, colleague, and our viewers around the world. We are, of course, coming to you from the mother city in Cape Town. Of course, we're here for the African Refiners and Distributors Association week here in Cape Town. They are here, of course, the discourse here is centered around tackling challenges and also looking at opportunities in the sector, but also focusing on the issues around sustainability in this particular sector. Well, you would know, colleague, that the sector has been marred by so many challenges, and of course, it has been making headlines for quite some time. But just to talk to us further about what we're here for and what is happening here, I'm going to bring in the president of ADA, Mr. Mustafa Abdul Hamid. Thank you so much for your time and welcome to Channels Television. Talk to us about the theme of this conference, and I do know that you are saying that Africa First, which is a step in the right direction. There are issues that are facing the continent. Talk to us about what ignited the whole idea. What is behind the theme of this 2025 ADA conference?
Well, first of all, thank you very much for the opportunity of this interview. So first of all, we've said Africa First, delivering our energy future. Because basically, fundamentally, the first law of human nature is self-preservation. Self-preservation is the first law of human nature. And there's a street saying that charity begins at home. So you ought first to be satisfied at home before you can begin to think about those outside of the home. So Africa First basically is to say that let's think about how to deliver energy to the African people. Not just because, as I said, it is an imperative, but because all around the world, Africans are more in need of energy, or if you want, are more energy poor than any other continent. It is projected that over 600 million people do not have access to electricity on the continent. Maybe 900 million, maybe another 900 million do not have access to clean cooking, and etc., etc. So we ought now than ever before to concentrate on delivering energy to the African people than ever before. Secondly, why this theme is also important is that the entire world, like I said yesterday at the opening, is thinking about themselves. There's America first. There is Europe now meeting every day to say that we can no longer rely on American support for the protection of the European countries, and therefore we ought to do things ourselves. So if everybody else is doing things for themselves, then more than ever before, Africans also ought to do things for themselves. And the fact that energy is what fuels our very existence as humans shows that within the energy sector, we ought more to do this engagement. The last point, and the importance of this team, is also that the whole world is talking about energy transition, okay? Transitioning to cleaner fuels, which will mean that we are in a hurry now as a world to get out of hydrocarbon energies. But even with hydrocarbons, we do not have access to it. Many African countries are now discovering their hydrocarbon resources. Are we as Africans to just go with the global agenda of abandoning hydrocarbon resources, or do we have to set our own agenda for transitioning, what many people call a just transition? We ought to have that conversation. Do we want to leave our hydrocarbon resources stranded? My answer is that we don't have to leave our hydrocarbon resources stranded. Those that say that they are transitioning quickly into cleaner energies have been exploiting their hydrocarbon resources for over 200 years. Many countries 10 years ago, 5 years ago, etc., etc. I think that we ought to define our own agenda for a transition. So when you put all of these together, then you would understand that Africa first, delivering our energy future, is the appropriate conversation to have on the continent at this time.
Let's then talk about infrastructure gaps. How are you hoping to achieve that with a conference like this, but also the importance of public-private partnerships? There is a talks of collaboration between government and private sector. How important is that in terms of bridging the gap of infrastructure deficit in the continent?
Well, as you heard yesterday, already there are projects. I mean, APO, African Petroleum Producers Organization, has talked about these trans-African pipelines that will deliver energy resources to countries. You know, these pipelines, I mean, there's the Southern African project, then there's also the Central African project. Already there is in existence a West African gas pipeline project. And for me as a Ghanaian, nobody would teach me better the importance of these transnational energy projects, because right now, without the West African gas pipeline project, which delivers gas for powering our electricity in Ghana, without it, half of Ghana would be in darkness. Do you get the point? And that is because of the collaboration that has gone on between Ghana, Nigeria, Benin, Togo, where the entire gas pipeline passes through for delivery. So infrastructure is important. We do recognize that many African countries do not have the resources, the capacity to do it themselves. So we now have private sector people like Dangote and co stepping in to try and build refineries. Like our executive secretary said yesterday, if we are saying that we are not going to leave our hydrocarbon resources stranded, we are going to exploit them. What are we going to do with them? We have to refine them.
Mr. President, I know you have to go, but just a final parting shot from me. Trump's tariffs, South Africa got 30%, and they say that they're still looking at ways to understand what does the tariffs means. We know that Nigeria is 14%, if I'm not mistaken.
Ghana's 10%.
Yeah, how concerned are you as a leader in this sector in terms of these tariffs that are coming out from the United States?
Well, the whole world seems worried. But let me tell you something from my very honest point of view. Trump is thinking exactly what I said before. He says America first. So I'm going to impose tariffs so that I can encourage local or American production.
So it's not selfishness.
Because humans are by nature selfish. Selfishness is not necessarily a negative quality. If Africans were also imposing these tariffs, and one thing I admire about Nigeria, for example, is what you've done with rice production. Nigeria has been bold to get where it has gotten with rice production because of the restrictions it has placed on importation of foreign rice. In my country, we haven't gotten there. Rice is perhaps, if you want, the biggest staple that is consumed in Ghana. Yet, all of our rice is imported. Now, what that does is that you require millions of dollars every month to import rice. So what does it do? It has an effect on your local currency. Your local currency is going to plummet. And once it plummets, cost of living is going to skyrocket. And there would always be economic problems. So if even an advanced country like America is thinking of protecting its local industry and ramping up local production, it should only teach us a lesson that we should also look inwards and try to either we can reciprocate if we want, if we think that reciprocation is not possible. For example, if Ghana was to say that we will reciprocate by imposing tariffs on all of these countries that bring us rice, it will shoot up the price of rice, whilst we do not have local production to match. So I'm just saying that Trump is teaching us a lesson.
Well, there you have it, colleague. That was the president of ADA, Mr. Mustafa Abdul Hamid, talking to us there, saying that, in fact, what President Donald Trump is doing is, in fact, a wake-up call for the continent to look inward and identify new markets. But we can only hope, colleague, that the discussions that are being discussed here will result into tangible actions and timelines that are not empty. Well, it is back to you in studio for now.
Yeah, thank you so much, Innocent. Obviously, we have great discussions and hopes, and we hope it doesn't continue to stay as hope and potentials and discussions. But that's ADA and ends tomorrow, so we can be sure that Innocent will give us more from the activities as African refiners meet and discuss the different issues which he brought up right there. Now let's head to the market and see how much tariff investors are still paying or afraid of at this time. Will, I hear there's a bit of recovery in at least some of the markets.
Yes.
And that gives us hope.
A bit of hope.
But we cannot say that...
some of the fear, maybe they're getting over it, and maybe they're already seeing ways to probably mitigate against, these tariffs and the shocks that it comes with it. So we're seeing some, like yesterday, we saw some banking stocks really dropping. We don't know the sentiment. That's on the NGX. We saw those sentiments red on all indexes, but today we're seeing recovery in those banking stocks, and possibly maybe for the ASI, we saw that slight, almost near flatline, but slight recovery. Hope
I think the Naira is the one we're really looking out for. That drop was really, really much since Friday. And we hope that,
African markets recover, because we saw them in the green today. Yesterday, they were all in the red. So it's a bit of hope.
We were getting used to it.
I think they're already pricing it in that, this is going to happen. This is here to stay. I think, how do we, work our way forward rather than stay in the loop and just continue to say, no tariffs, we don't need tariffs.
Alrighty.
Okay, so now let's see how major equities we track in Africa performed at intraday, mostly positive. Well, they were positive at intraday. Nigeria's NGX was up by 0.02%, and this was driven by recovery in banking stocks. We saw JSE in South Africa up 0.89% at intraday. Elsewhere, Egypt's EGS was also trading up at 0.07%. You can have that on the screen. Now, Kenya's stock markets, however, closed Monday's session in the red. Remember, it closed last week in the green, but starting off Monday, I think it's now beginning to react to the tariffs. Now, let's take a peep now and see what's happening at the NGX. Onose Asotie Enaolo, Senior Investment Analyst, Main Street Capital, joins us. Good afternoon, Onose. Looking at the oil share index, we say that it lost that 105K level in Monday's trading session, dropping to 104. We saw a bit of relief at intraday. Still hope we're there. It's near flat line, as I mentioned earlier. Onose, is the recent drop in the NGX ASI a likely indication of a larger market correction here? Is that what we're looking at?
So the market is, I wouldn't really say correcting. It is correcting in some sense, but not to become bearish, right? If you zoom out, you said earlier that we lost the 105 points level yesterday's session. Yes, so yesterday's session was the second largest daily loss we've seen. But if you actually zoom out from the chart, you find that there is a significant support level at around the 102,300 point level. So yes, we are seeing a correction, and it's expected. We reached all-time highs several weeks ago at around the 109,000 level. So what we're seeing is the market pulling back. So despite what you are seeing, in the market with all the red, this is actually quite healthy, for the market, especially if if we possibly hope to see even higher prices moving forward.
Okay, so what are analysts projecting for the index in the short term? What are you projecting for the index in the short term? And also, what steps can investors take to mitigate risk? Right now, people are probably wondering where to, position themselves in light of this recent performance we're seeing. Seems a bit dreary, doesn't it?
Yes. So in the short term, I'm projecting that I expect the all share index to continue to to trend lower until the next major liquidity point, which is the 101 to 102,000 level. And if you look at what's going on in the economy right now, a lot of things are happening in the global economy that are affecting the local economy right now. Even support my expectations. You see that if you look at the foreign portfolio investment reports for the last 2 months, we've seen capital outflows. We've seen a reduction in foreign portfolio participation in the market. I believe we're going to continue to see this as the tariff wars continue to be drawn out, and foreign investors flee from risky securities into more safe haven securities. Now on the local level, we're going to continue to see even in banking stocks that are so far one of the best performing sectors, we are seeing people begin to reevaluate some of their valuations and take even other things into perspective in their valuations. We know that even the dividend coming in was a little bit of it was a bit lackluster, because I think only GT the dividend hit about 10% dividend yield. So we will see people kind of deleveraging, and one way you could easily risk. If you are not already in the market, lowest hanging market right now, because what we're seeing, if you look at Giant Bank today, we're seeing it pushing lower, Fidelity pushing lower, and these are some growth banks. Maybe don't get into the market right now. If you are already in the market right now and your positions are negative, don't rush to sell, because despite everything that's happening, like I said, the market is actually not bearish yet. So don't be in a hurry to sell if you're already in the market. And just wait until we get to the 102,000 level, with the NGX ASI, and then watch the markets, to see how the market reacts and the interplay between buyers and sellers. And I think at that point, if everything goes according to how according to plan, or how I expect it to go, then I think that might be most possibly midway into the quarter, and possibly when maybe Q1 results begin to be published, for a lot of these stocks and banks, and then you can now see, what's going on, and you see how analysts, begin to either confirm or reevaluate their analysis, and then we'll see the interplay between buyers and sellers, and that will give a better idea, into what the market will do, for the, mid to longer term.
Okay, and that's really out of time now. I would have loved to talk about some of the earnings and the revenue we got from that, and seeing investors' reaction to that. Some of them shrugging it off, but we'll have more time to discuss in another program, in the same program, but another time. Thank you so much, Anose Asotie Naolo, Senior Investment Analyst, Main Street Capital, for your time this afternoon.
Thanks for having me.
So let's look at other markets now in the Middle East. Major stock exchanges were positive. Thank God, recovery from the Trump tariffs. You see Dubai index up 1.64%, Abu Dhabi up 0.6%. Still within the region, Saudi and Qatari indexes, that's the Tadawul in Saudi Arabia, was up 1.28%, and we see the Qatari index up 1.34%. Now let's go into the country where, we're seeing these tariffs come from. Stock futures, climbed in pre-market trade in the U.S. on Tuesday as investors looked to buy shares following a rough day on Wall Street, triggered by President Trump's tariff policies. Now, the Dow futures surged about 2%. S&P 500 and the Nasdaq futures received at 1.49 and 1.26% each. And this comes after a volatile Monday session where the Dow dropped over 1,700 points before recovering. The S&P 500 briefly entered bear market territory. Thank God it came out, while the Nasdaq Composite gained modestly. Now, Treasury Secretary Scott Bessent has hinted that tariff negotiations could last until June, and rising Treasury yields suggest recession fears may have been overblown. Now, in Asia markets also saw a strong recovery on Tuesday, rebounding from steep losses driven by U.S. President Donald Trump's tariff threats against China. Japan's Nikkei 225 surged 6.03%. That's a whole lot, recovering from the losses they've had and closing at 33,012 points, while South Korea's Kospi added 0.26%. Hong Kong's Hang Seng Index climbed 1.51% after Monday's sharp 13% drop, marking its worst one-day decline since 1997. Mainland China Shanghai also rose 1.58%. Nifty 50 in India also dancing in green territory. However, with some markets in Indonesia, Vietnam, and Thailand, they're continuing to struggle. Trump's warning of an additional 50% tariff on China if the country doesn't lift its duties on U.S. imports looms large, contributing to volatile market movements across the region. So, Ini, that's what we have for the markets, and hopefully we hope that China and the U.S. come to, a negotiating table and stop this trade war, because, like I said earlier, there'll be some crossfire and some people might get hit by stray bullets.
Yes, I pray Nigeria is not part of it.
I pray we're not.
All right, thank you so much, Will. Well, talking about the reaction and the trade war, almost a week or so since that announcement by President Donald Trump, the EU, of course, they've been meeting. It's a bloc, so they've had to meet and get concession and the buying of some of the countries. Now, I think we have an idea of, how they want to respond, and Lars will tell us about it. Hi, Lars. So the meeting, I believe, was a long one in Brussels yesterday, but now we have some plans, or at least what to expect, yes?
Yes, Ini, how you doing? Thanks for having me. We're still actually waiting on most details. I got to tell you, we are getting a couple of news here. I honestly got to tell you that after yesterday's Foreign Relations Committee meeting, I thought we would get a lot more details a lot sooner. For now, we have heard that the Commission here is still looking at measures, but that apparently they are not done evaluating all the steps. One thing we did hear is that EU Commission President Ursula von der Leyen has offered to the US government to take all the tariffs on US industrial goods down to zero. Now, that, of course, would be a big step towards appeasing the U.S. However, the Trump administration hasn't at this point reacted to this proposal, at least not directly. Trump again has said yesterday, maybe that's a little bit of an indirect response, that the EU had been founded to, quote, to screw America. This is obviously complete nonsense, but there we are. He also reiterated how he loves his tariffs and how the U.S. are already raking in billions per week. But we also know that that, of course, is not true, Ini, because American consumers end up footing the bill and not people an ocean away. But it sure sounds like there is not much of a reaction at this point from Trump to the little detail that we have.
Yeah, well, so it doesn't even look like this zero tariff request will get into the White House to even begin with.
Yeah, it's really hard to imagine that we're getting here anywhere with Trump. It's interesting, however, of course, with markets in free fall and with many people criticizing Trump, even from, of course, within his party, and including supporters who are literally seeing their retirement investments implode. It does seem to me that Trump, of course, wants to still project strength here, to not look weak in the face of what is currently happening. Also, you know, what I find interesting here between the EU and Trump, the EU offer is awfully specific on industrial goods, and that is precisely the kind of goods that Trump, of course, wants to see moving to the United States. Not that that's likely to happen, but for him to backtrack here is likely just not happening. Also, a part of the EU deals is also about cars here, with setting the tariffs back to zero, and Trump hates the fact that there's a lot of European cars, German, French, Italian, driving on US streets, while there are very few US-made cars being sold to the EU. Now, there's, of course, a ton of reasons for that, and we talked about that many times before. But it will likely stop Trump from walking back his economic threats, because, again, he wants to look strong here, and I don't see him fold anytime soon.
Well, sounds like a battle of ego, Lars. I hope it doesn't get to that, you know, because there are lives and economic factors to be considered, you know, in all of this. So we've seen the Asian market recover. What's happening in Europe?
Yes, we do actually see a little bit of a recovery here as well. Let's just go through what we've seen. We talked about it yesterday. Last week we had the Tariff Thursday, then we had Black Friday. Yesterday was Panic Monday, and everybody was hoping we get a turnaround Tuesday. Today, now here, we are seeing exactly that in a very modest way. We're seeing the DAX up in Frankfurt, 2.5%, but let's not kid ourselves. All we are seeing for now is obviously bargain hunting. When you lose thousands of points, of course, you will see some people running in and buying shares that have dropped in price. But as long as we have this uncertainty coming out of Washington, we won't see a real turnaround. So what's next for tomorrow? Maybe it's wobbly Wednesday, and then it's troubled Thursday and freaky Friday again. We'll see. We will have this uncertainty in the market. It's got to stay interesting.
Lars, I just knew you would get all the weeks, you'll get all of them in. Thank you. I'll keep that in mind. Talk to you tomorrow.
Thank you,
yeah.
See ya.
All right, now we head to Africa, where Egypt's net international reserves reached $47.75 billion at the end of March 2025. This is according to the Central Bank of Egypt. Egypt recorded its lowest population growth rate during the first quarter of 2025 compared to the same period in both 2024 and 2023, highlighting continued progress in curbing demographic expansion nationwide. And this translates to an average annual growth rate of 1.34%, down 1.4% in 2024 and 1.6% in 2023, reflecting the positive impact of the country's population policies. The slowdown in population growth coincided with improving economic indicators, as Egypt's real GDP expanded 3.5% in the first quarter of 2024-2025 fiscal year, and that's up 2.7% in the same period the year before. And by substantially investing in blockchain, artificial intelligence, and other cutting-edge technologies, Morocco is presenting itself as a growing IT center, targeting a 10% increase in its GDP by the end of the decade. the North African country fits its larger Digital Morocco 2030 plan, with investments surpassing 11 billion dirhams. That's about $1.1 billion by 2026. The government's audacious plan is to generate over 240,000 employees and train 100,000 people yearly in digital skills. The government's programs also involve teaching small and medium-sized businesses on operational AI use. Over 1,000 local SMEs have already profited from these initiatives with help from overseas partners, including LinkedIn and European Bank for Reconstruction and Development. The South Sudan government has announced that it has collected 132.6 billion South Sudanese pounds in non-oil revenue in March 2025. The Commissioner General of the South Sudan Revenue Authority, Simon Akwe-Deng, revealed that they recently launched the e-permit and the Regional Electronic Cargo System, that's REX, in Uganda, emphasizing that the integration of these systems is a testament to their collective efforts in managing cargo seamlessly. Deng says that the South Sudan Revenue Authority will effectively monitor the transportation of goods such as cigarettes, alcoholic drinks, cosmetics, and luxury vehicles, among other sensitive items that are often smuggled across borders. So while we see recovery at the stock market in most parts of the world at this time, let's see if there's a recovery with crypto. There we see the color is green for this afternoon. So that is good news, I guess. But we see when we look at the price, there is under 80,000, 79,763.82. So perhaps there are some entrants in the last 24 hours has driven Bitcoin, the price of Bitcoin, to up more than 3%, and we see most of the board, it's green at this time. So I wonder if it's time to relax yet, but let's see the headlines from the crypto space, starting from Binance releasing the results of its first ever vote to delist initiative. And the outcome, while not entirely unexpected for those tracking low volume or low activity assets, still landed as a sudden and final decision for 14 tokens, which the platform has confirmed will be delisted officially from April 16. So 14 tokens will be delisted from the Binance platform. Find out which one. I hope you're not invested in any of them, but do find out. And then Dogecoin, recently they broke below the critical $0.16 support level after that month-long consolidation, registering a nearly 5% decline amid a broader market correction, which of course we have been seeing because of the tariffs and all other. And then this flush out has forced weekends to exit either at break-even or with minimal profits. Well, I guess some investors are just not so patient. However, the relative strength index is nearing oversold territory, talking about Dogecoin hitting a potential bullish reversal. Will we see Dogecoin reverse soon? I don't know. We have to look at this space to know what's going to go on. Then following a 2-year low, Ethereum has bounced back. Imagine Ethereum bouncing back at 1,550. We've seen better days, but this is where we are, posting a nearly 10% gain in the last 24 hours. Remember yesterday about this night, it was 1,400 plus. So at least it's more than 1,500. So I don't know how that makes you feel. But let's find out what's showing things about all of this. If perhaps it will be a positive relationship between the stock market and crypto market. I wonder. Hi, Sean. Good afternoon.
Good afternoon.
So we see a bit of green, even though the numbers are not very impressive. I mean, are we okay? Are we on our way out, or we are still watching and listening to what's going to come out from the White House?
I think pretty much for cryptocurrency, digital assets, technically, most of the investors know that when the other markets are down, the best time to buy crypto that's then the best time to buy cryptocurrencies. Evidently, of course, the news and about the tariff wars, global economic turndown would definitely affected the market initially. But I think that people are now beginning to see that they can hedge with cryptocurrency. But of course, fingers crossed, we hope that it will drive the prices up because more people have been waiting to buy and everybody was just waiting for that dip. There are a lot of institutional investors. There's been a lot of news within the digital currency space. There's a lot of regulation. We see that even a country like Pakistan has also, they currently appointed the former CEO of Binance, to join their crypto committee. So you see, these are signals that normally people would see as positives because we see that it is no longer a speculative asset as people thought it was. And, in general, there's institutional adoption and the markets, people are definitely investing.
Yeah, but some people are still asking if we have really hit the dip, if the worst is over, or we can still wait for a better point of entry.
The chances, a couple of years ago, the dip would, let's say 2022, the dip took us to about 15K, right? Then we didn't have as much institutional investors. There was not as much adoption globally in terms of countries. Now, on every major economic forum, there's conversation. Even at the United Nations General Assembly, there's always conversation about digital assets. So it means that the whole world is talking about it. Businesses are beginning to, have some of their they're beginning to carry cryptocurrencies on their balance sheets and all of that. Even in our own country, Nigeria, we've seen that the recently passed Securities Act, Investment and Securities Act, has also properly identified digital assets, and we see that regulation is coming, so people are definitely. So we might not see those kind of dips because there's always somebody on the sidelines that's waiting to buy. The dip for me may not be the dip for everybody else. So while if someone else is expecting 10, 20, 30K dips, some other people are okay with buying in at maybe 70K.
So for you, do you think this is a good entry point?
The best time to buy digital assets is yesterday. The other second best time is today. So whatever point we find ourselves is basically just do the basic things. Of course, do risk management, know your risk, and then definitely know that it's also very risky. Whatever it is that you're investing in, stuff that you can afford to lose, or give some time. So yeah, I think we can always buy and then always dollar cost average. Even so, if it dips further, you just make sure that you diversify your portfolio and then probably are able to buy some more.
Is that what the Nigerian crypto community, is that what they're doing now, mostly, from your conversations and interactions?
Well, the Nigerian community, right now, Nigerian community is bullish because of the Securities Act, so it shows that, of course, the administration is committed to regulating crypto fully. I believe the SEC too has been, educating the population on what the act is about and how it affects everyone. So right now, people are also gearing up. They're building. Nigerian community are pretty much doing more building in terms of people are building digital currency projects and whatnot. So yeah, for the average investors, people are buying. But I believe that until we get for Nigeria, until we get full mainstream adoption, primarily with maybe the central bank giving maybe like a letter of no objection or permitting the banks to actually allow people to carry out cryptocurrency transactions, then we'll be able to see that wide-scale adoption. So it's still, a lot of corporates are still very much on the fence with this one.
All right, what do you see as a trend for the rest of the week on a price action now?
Well, if everything still goes on as it is, if they don't make peace, definitely I believe that the cryptocurrency space will see some level of prices will come up. We've seen right now that there's been not too much activity in all that meme coin space. People have cooled down on that. Now it's time for serious business. So I believe that most of the people will channel their funds into the top 10 cryptos: the Bitcoin, Ethereum, XRP. Solana is taking a hit, but definitely I believe that course, their own. If they continue to build proper real world use cases, as opposed to just the whole meme frenzy, I believe that is also it'll also gain. But yeah, so I think in the next couple of days we'll see. We should see. It's not financial advice, but yeah, I believe that we should see some gains within the cryptocurrency space.
All right, important there that it's not a financial advice. I mean, it's just a perspective. Thank you so much, Seun Daniel, for your time and your perspective.
Thank you very much for having me. Have a great day.
You too. All right, so that's it on the program. Thank you so much for being a part of Business Incorporated. Of course, we'll come your way again tomorrow, starting from 10 a.m. with Business Morning, and then we'll do business in the afternoon with Business Incorporated. I'm John McQuarrie. Do enjoy the rest of your day. Bye-bye.